Well, thank you everybody again for joining us today for another iteration of SCF's webinar series, How to Finance EV Charging with No Upfront Cost. We're excited to have you all here today to learn more about how you, a real estate owner-operator, can earn significant annual revenue and get ahead of the EV charging curve. Today's agenda is as follows. We'll talk about who SCF is and why we are equipped to be your partner in this process. We'll dive deep into the value proposition of these chargers and discuss the many benefits of adding EV chargers to your property. We'll then venture over to the second most important feature of our EV charging solution, an energy-saving PPA, or Power Purchase Agreement. With rate hikes imminent up and down California, but also the rest of the country, we'll discuss how a PPA allows for your site to have maximum revenue upside. I'll then pass it over to my colleague Clifford Chang, who will discuss the most recent data regarding EV chargers and electric vehicles and their continued growth. He will then identify and explain what makes a great EV charging site and the overall sites that SCF is targeting. He'll finish off by showcasing an example project with projected revenue and PPA savings, as well as discussing the expected timeline a project might have. We'll finish off with a Q&A session and try to answer as many questions as possible in our allotted time. Let's begin. So who is Sustainable Capital Finance, or SCF? We are a third-party financier offering energy as a service for commercial and industrial projects, as well as any and all nonprofit organizations. We offer what you call takeout financing, which means that we look to own and operate the project for the life of the agreed upon term. Our primary role is best identified as a developer. We work hand in hand with you, the property owner operator, the installer of the project, also known as a contractor, in some cases an EPC, which stands for engineering, procurement, and construction. And we'll work with the end owner operator of the equipment, who will provide all operations and maintenance of the system over the course of the term. Now, we've had ample experience operating in this role over our 13-year operating history. In that time, working with property owners, schools, religious institutions, municipalities, and more, we've generated over $500 million in project value. And our financial backing is strong. Our solutions are powered by some of the market's largest independent power producers and will continue to remain so for the foreseeable future. So on to EV charging. There's no doubt that if you're attending this meeting today, that you've either seen a fellow business owner generate revenue via EV charging stations, maybe you drive your own electric vehicle and have realized the need for more charging stations in your area, and or most likely you're just well aware of the great need for EV charging infrastructure, and as a real estate owner-operator, would like to get ahead of the curve. Wherever you're at in that process, I can assure you that we feel the same, and we've packaged together a solution that we believe to be a win-win for property owners alike. Now, the first and most important feature, no upfront cost. EV charging stations, particularly fast chargers, are expensive, and we know that. So we don't ask our property owners to participate in any of the capital stack required for the equipment, installation, or maintenance of the system. SCF will handle all of that. The only component that our property owners pay for is a new electricity rate in the form of a PPA or Power Purchase Agreement, which we provide to our customers at a discount to their current cost of power. We'll discuss that more in detail in the following slide. Now, the second most important feature, revenue share. That's right. We generally offer our customers anywhere between a 3 to 10% revenue share of all revenue generated from the charging stations. A general expectation for revenue can vary based on the site, how many charging stations we've installed, what kind of property it is, and so on and so forth. Our example project at the end of the presentation shows what an ideal site might generate in a year and over the course of a 30-year term. Now, other amenities that are also really important and really drive home a solid case for installing chargers on your site. The new property feature can attract new customers and offer an amenity to your staff and or existing customer base. And as I mentioned prior, if any equipment stops working or needs to be replaced, SCF and their partners are highly incentivized to be on site as quickly as possible. Because if our systems are not working, we do not generate revenue. And that's not only bad for you, it's really bad for us. So really everyone suffers from equipment not working. Finally, as I mentioned prior, we only work with financially sound and reliable partners. And that reaches from our investors all the way to the installers we select for our projects. We have high standards for our projects and expect the same from our partners. Now, our solutions are different from a Tesla provider or other charger company that might just focus on providing chargers and providing you a lease payment. While we can take a look at charger-only sites, our main differentiating solution and most compelling offer is that of a solar plus EV charging solution, oftentimes requiring additional energy storage that truly allows the site owner to maximize their revenue earning potential. To do this, we provide a PPA or power purchase agreement, offering you a rate that is lower than you are currently paying for your energy costs. Now, this rate is typically at a 10% discount to your current energy rate, but can vary per site. Now, this allows you to do several things as a property owner. A, reduce your operating expenses. There's nothing better than knowing what you're paying for your energy versus allowing those mean utility companies to increase their rates on a whim. B, reduce utilization risk. So for any site that we're putting charging stations, we have a utilization expectation, and that allows us to formulate an expected revenue projection for that site. Now, if for any reason your site doesn't generate the revenue we project, you still have significant money for your business via the reduction in energy costs. So your net operating income increase is not fully dependent on how many people use the chargers. You are essentially seeing all the upside regardless of the utilization we expect or that comes in from those chargers. And C, it can really help you achieve any ESG goals that you might have as an organization. If your site has a particular environmental impact goal, adding solar truly is a great way to realize that. And finally, much in similarity to the EV chargers, if for some reason the solar system is not working to its highest possible efficiency, SCF and their partners are highly incentivized to be on site as soon as possible to make any necessary fixes and or replacements. You never need to worry about any equipment being neglected, as we are highly incentivized to make sure that our equipment is running as efficiently and successfully as possible. And with that, I will pass it over to my colleague, Clifford Chang.
Thank you, Matt. This next slide illustrates the increase in EV adoption and the tremendous need for charging infrastructure. Listed are some statistics for EV adoption. As you can see, numbers are continuing to rise year after year. Consumers are more interested in electric vehicles, not only from a potential environmental or green perspective, but also cheaper to own and operate than gas-fired cars. The number worldwide has increased. The number of cars in relation to gas-fired is increasing. The only thing that has lagged behind is the availability of public charging. If you see the stats, 200,000 were available with only 30,000 fast chargers. Current market demand is for these types of fast chargers where 600 miles of charging range is available in 1 hour, typically in the chargers in which we install. And if you compare the number of EVs, 4.5 million to 200,000, you see what the ratio is. But if you compare that to the number of fast chargers, the ratio is even higher. So there is a definite need in the marketplace for this type of fast charger where you can stop at a commercial property, take care of other business, and simultaneously charge your car. Next slide, please. As I just mentioned in the previous slide, customers and consumers are looking for charging locations where they can take care of other business while simultaneously charging their car. Here's an example of some of these types of properties: shopping centers, office buildings, restaurants, sports facilities, coffee shops, etc. And here are some of the factors that we look for in assessing the viability of a site. So you'll see high local EV traffic, proximity to highways, traffic based on underlying patrons, ample parking, and easy accessibility to the chargers. This last slide illustrates the potential economic benefit to the property owner or EV charging host. You will see on this slide a project assumption of 8 chargers at a particular site with a 10% revenue share, 500 kilowatts of solar, and 880 kilowatt hours of storage supporting both the property and the EV chargers. This revenue you will see in year 1 is $61,000. It increases to a levelized revenue of $100,000 in year 3. This is typically based on 2 to 3 hours of utilization per charger per day. Years 1 and 2 are discounted to allow for adoption and ramp up, although many sites, particularly those in California, should have much shorter ramp up periods, and the time to realize the levelized income from the charges should be greatly reduced. This also assumes 2 to 3 hours of charging. If anybody has seen a Tesla charging site, you will know that there's typically a line and or cars charging morning, noon, and night, with adoption, utilization closer to 8, 10, 12 hours a day. So our projections are very conservative. So taking the 100,000, if that were 2 hours of adoption and that increased to 4 hours, that number would double. And the table goes on to show year-to-year increase. Those are based still only on the 2 hours and assume 3 to 5% annual increase. The other benefit of our program is potential energy savings to the property. Depending on the amount of solar and the amount of usage, energy saving to the property and operational savings can also be garnered. That is more typical and reflective in those numbers that you see on the graph: 20,000 in year 1, 25 in year 2, and so on. So just based on this assumption, you can see that the economic benefit of revenue is at least $6 million, PPA savings $4 million, so tremendous economic benefit can be derived from this program, all without any capital expenditures. Now, if you are compelled by our offering and want to pursue this opportunity, here are the steps in our process. The registration on the SCF suite is primarily for contractors and developers, so you can skip this step if you are a property owner, but we would want to analyze your utility data to properly size the solar and storage systems. Once we receive that data, We will do some internal work, analyzing your bills, properly sizing the system, calculating the number of chargers that's appropriate for your site, and we will prepare a proposal that we would present to you, outlining the system size, the estimated PPA savings, projected revenue, and so forth. If you would like to proceed at that point, we would ask you to sign a non-binding term sheet and then move to a kickoff call, drafting of our agreements for your review or council review, real estate due diligence, and so on. Once the agreement is signed with the property owner, we would then engage with an EPC contractor, begin preliminary design, submit for permits, and then begin construction. That's the end of our presentation for today. We will take a few moments to answer any questions that you may have, and I thank you all for your kind attendance today.
All right. If you have any questions, feel free to use the chat bar on the far right-hand side of your screen. You can populate a question, and our team will sort through them and go ahead and answer as many as we can here in our next couple of minutes. Looks like we have one coming in regarding parking space, how much a normal system size would take up. So we generally, our standard general expectation is we will take up one additional parking spot to the allotted number of charging stations. And generally, we're looking at anywhere from 4 total chargers to 12 chargers per site. So I would say at the very minimum, we would need 5 parking spaces, and at the very maximum, up to 13. There are obviously situations where there might be planter areas on a site, grassy knoll areas where we're able to incorporate some of our equipment and could cut down on that sort of standard expectation. But I would say sort of as a baseline expectation, you would have to kind of acquiesce or be willing to kind of provide at least up to 5 parking spaces for our equipment. That's a good question. Looks like I'm getting another one regarding average start to finish time frame for projects. So we generally expect a project development timeline in the commercial space anywhere from 3 months to up to a year. And there are some situations where it's a little bit quicker. We're maybe working with a utility that doesn't have as many submissions or interconnection, a queue of interconnection requests that isn't as long. So it can vary. There's a lot of situations where the utility can have some say in how quick that timeline progresses, whether we're submitting for permits. And then we'll have obviously sort of an underwriting process with our off-takers. If we essentially have debt on the property, we may have to work with a lender to get an SNDA. There's other underwriting components that we'll essentially have to go through that could potentially prolong a development timeline, or in some situations be quicker. It kind of just depends on the site, depends on the utility. And that actually is a great segue for another question that we're getting in here, which is what our underwriting requirements are. So we do ask, we're very transparent about this with our off-taker partners, off-takers being any real estate owner operator, and that we're looking for up to the last 3 years of audited financials. That's sort of our standard expectation that our off-takers are going to provide to us. There are some situations where we don't have all that information and we're able to kind of work with you. We pride ourselves in working with investment grade and sub-investment grade partners. So if you don't have the greatest of financials, that's okay. SCF wants to be able to work with you. Our partners want to be able to work with you. But that is sort of the standard pass/screening we're going to ask of you. And then that'll kind of start the process and kick off the process of determining if your site is able to be supported, and what that pricing looks like. Looks like we're getting another question on EV projects outside of California. So we are definitely expanding. California has been definitely ahead of the game when it comes to EV charging infrastructure, providing statewide incentives for us to take advantage of on your behalf, to subsidize and make those systems more economical. We are starting to expand to some newer states across the U.S. Arizona, Illinois, some northeastern states as well. That we're looking to potentially provide our full-fledged PV, meaning solar plus energy storage plus EV charging solution. And so, if you have a site in a state that maybe we don't have as much familiarity with, we're happy to take a look at it. There might be some incentives that we're not aware of that we could take advantage of. But I would say historically, California has been our primary market, and we are actively trying to expand to other states as more information, more incentives become available to us to make those solutions viable. So what are the types of properties, another question coming in, based on your experience, are good sites for this solution? So we kind of mentioned that briefly in this presentation, and we'll definitely make sure that you all have a copy of this presentation so you can take it home and kind of obviously rewatch. We found sites that people are going to spend that 30-minute to an hour time frame that you generally expect for a fast charge. Shopping centers are obviously a great fit for that. They'll definitely have situations where people are looking to go shop for a half hour to an hour, maybe potentially longer, and charge their vehicle during that time. The great thing with that type of site as well is that there's going to be some sort of common consumption load that we can offset with the solar. So if there's a main building load or a main, essentially meter that we can connect to provide you as much PPA or energy savings as possible, that really solidifies the solution for us, makes it even more of a slam dunk from a property owner or real estate owner operator's perspective, and essentially makes everyone a lot more happier when we're able to provide you significant savings via the PPA, but also upside via the revenue from the charging stations. Other sites that we've definitely had success with, quick service restaurants. They can be ideal based on a specific design. We found just real estate owner operators, so hotels. A batch of hotels could be a great, essentially revenue piece for a hotel owner operator, whether that's a combination of level 2s and level 3s or just primarily level 3s. We're happy to work with you based on your clientele. And if you have enough staff that drive electric vehicles that warrant level 2s. But I would say for the most part, the fast charger, the DC fast charger, the level 3 charger is really the primary solution for this type of offering, and is what we see as the most attractive to real estate owner operators as well. So really, any type of commercial real estate we can definitely take a look at. There are different, like I said, shopping centers, hotels, quick service restaurants. Those types of sites definitely tend to warrant better utilization expectations. But we've also had success with churches, golf and country clubs, driving ranges, sports facilities, places that have ample space in their parking lot, and essentially see a lot of essentially traction or have a lot of visits over the course of the year that could definitely warrant essentially some fast chargers on site. So that appears to be the whole of the questions that we've been asked. I'll go ahead and give you a few minutes back in your day. We appreciate your time. Like I mentioned prior, we'll make sure we get this PowerPoint presentation / webinar over to you as soon as possible. And we appreciate your time today.